Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of June 30th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week was definitely good for Delaware mortgage rates. If you take a look at the bond chart on the screen, you can see the green arrows up, and the trend, the short-term trend is for mortgage bonds to increase, which has had Delaware mortgage rates drop lower, and they've actually hit the lowest interest rates in over a year. So that's great news there. Now, the technical signal on Friday, mortgage bonds rose, then sold off. So they formed a bad technical pattern on Friday. So we're going to recommend locking in your Delaware mortgage interest rates to start the week. They're at the lowest we've seen in a year. The short-term technicals are for a sell-off. So definitely start the week locking in that great rate you probably got on Friday. Now, what's the long-term outlook for interest rates and the stock market? You definitely want to pay attention for your portfolio here. If you take a look at this chart on the screen, that's a comparison of durable good new orders and the S&P monthly average daily closes. And if you've looked, in red, the daily orders is a leading indicator of the S&P. So whatever it does, typically the S&P follows. And that's been true except for 2007 when the financial crisis, you can see right there on the screen. But recently, the durable goods have been trading sideways to slightly lower, and the stock market's been rallying because of the quantitative easing that the Feds have been doing. Now, they're pulling back $10 billion a month we've been discussing. By the end of the year, the QE is going to be done. So where do you think the stock market's going to go? It's going to go back to tracking the durable goods orders, so it's going to fall. We're going to have a sell-off. So protect your portfolios, take a look at where you're invested. But what does that mean for mortgage rates? Well, that means mortgage rates could stay low even though the Feds are tapering their bond buying process, because as the stock market sells off, that moves money into the bond market, which will supplement the money the Feds are no longer putting in there. So we could see interest rates stay low an extended period of time if the S&P goes back to tracking durable goods. So check into that. And then economic news, we had the final reading of the gross domestic product, which is called the GDP for short, for the first quarter of 2014, and it was a stinker. We are expecting a contraction of negative 1%, and we actually got negative 2.9%. That's the worst reading since the first quarter of 2009, which was the height of the Great Recession. So that is not good news. This comes 6 years after the Great Recession and $4 trillion later stimulus money, and we still got a negative productivity in the first quarter of 2014. Now, some people are blaming that on harsh winter weather. So if that's true, which I'm not buying that, but if that's true, then we should see a huge rebound in the second quarter because there's no harsh winter weather in the second quarter of 2014. So we'll keep you abreast on that, but that was bad news for productivity. And then weekly initial jobless claim came out on Thursday at 313,000 claims, down 2,000 from the previous week. And they've been consistently holding in the 300,000 range for jobless claims, so that's been pretty steady. And then there was some discussion of the jobless claims in the labor market last week. 6.3% is the unemployment rate. That is not a real true reading on the economy, because it's missing the people that stopped looking for work and the people that put part-time work who would rather have full-time work. With the jobless claims this high in the 300,000, that number is not a real measure of what's going on. So we'll have to look into that and see where we are. We've got the jobs report coming out next week, so that could be a big mover. Then we saw another reading on inflation last week, which was the personal consumption expenditure, or the PCE for short, which is the Fed's favorite measure of inflation. Now, the PCE was up 0.2% month over month, and the core was up, is what moved up from 1.4 to 1.5% year over year. So inflation is slowly heating up. Remember, inflation going up is bad news for mortgage bonds, and the Feds have been hitting they're going to have to move the short-term Fed funds rate sooner than they were expecting, probably maybe first quarter 2015. So that could be a shock to the economy. Now, housing, great news in the housing market. New home sales for May 2014 surged well above expectations, jumped 18.6% in May from April to 504,000 units. Now, remember, new home sales are a measure of home builders' homes they've sold in the month of May. And then we had existing home sales for May. That also was up 4.9% from April to 4.89 million units. So great news. Two good reports for the housing. Shows we did have a rebound. That harsh winter weather may have affected what was going on in the first quarter in housing. And then NAR released a report on rents. Rents are rising very fast. They're up 4%, which may bode well for housing, actually, because the people that have been on the fence about buying a home. They're right now renting, as they keep seeing their rents surge higher and may get them off the fence and move into the housing market. So that may actually be good news. And then in the local news, the next free first-time homebuyer seminar is Saturday, July 19th. And that's in Newark, Delaware, at the Christiana Hilton Hotel from 10 a.m. to noon. You can register for that by giving us a call in the office at 302-703-0727 or online, www.delawarehomebuyerseminar.com. Look forward to seeing you guys next week.